Hey. Right, let's start. Welcome to any new viewers. This is Mike Hamilton from Trade the Easy Way with the regular weekly review. So let's kick off with the dollar index. This dollar index is just it's made a new 2021 high. And today on Monday, the 9th of May. And so if this stays high, then that spells more downside for the markets. Traditionally, the US markets are divergent with the dollar. If the dollar is still a safe haven, that is changing slowly but surely, and the day will come when things will move across to cryptocurrencies, Bitcoin, etc. But at the moment, dollar is still king. All the main commodities, etc., are across the globe are traded in dollars overall. Right. So if this stays high, then that spells trouble. We've got US inflation this week, UK GDP, and the Fed budget balance this week. So a busy-ish week. Non-farm payroll overall was good. But the geopolitics is dominating, and and inflation is dominating, and that is not going to change anytime soon. Bear with me 1 second. My office window is noisy. I'll just shut it. Hang on. Right, so let's go straight to the Nasdaq. What the Nasdaq does, the rest of the market follows. And yet again, we are lower. So we had the push up on the Fed day with the rate rise, and they just sold into it. Pushed up into resistance, and here we are making a lower low. And we are at the moment, we're still under the midline. Every time you're under the midline in the MACD, then short, and these averages are crossing again to the downside. So the volume on the downside has been increasing. So they're coming down on volume, which is bearish. So unless we can turn around on this support, we are in for some lower closes. Where do I think this market's going? If we slip underneath here, then I think this Nasdaq is going to hit 11,000, possibly lower, and the Dow. I think the Dow could come down to this 29.5, which was the January 2021 lows. Unless, of course, there is some divergence there at the moment, where, just grab my pen so I can show you. Actually, no, there isn't divergence. Sorry, I take that back. We are on repeating these lows, and the averages are still open. If, however, we close up here and we see an increase in buying volume and the MACD crosses, then I would say there is divergence. There is divergence. I mean, as we speak, it's divergent. You know, we're equal low with a higher low on the MACD. So there's a chance. This is last chance saloon, basically. That's what I'm trying to say. This is last chance saloon for markets. If we close underneath here, then we are not found a bottom. Right, so let's cut across to the DAX, German DAX. It's not down to the March lows, but this 13,250 is the 2021 lows. That's the January 2021 lows just underneath here. So that's in last chance saloon, and of course the FTSE is going to be no different. That is in that's lower, and that is just lower, simple as that. No sign of, we stayed up here for a lot longer period. Once we broke down this structure on Thursday the 5th, last Thursday, then any highs at the moment are still lower, coming down on volume. So let's talk about what we can do with that. In the meantime, let's have a look at gold. The strong dollar is capping the ability of the gold to push back up. So at the moment, that looks as if we could come to see 1823, unless we can pick up from here and start getting higher close. Even the oil has succumbed to a stronger dollar. So you can see this 110 was breached again, and now we are looking lower. So I think we can come and, if we keep going, which at the moment looks like we can come and see 95. So moving on, silver is the same story as, sorry, I should have covered silver when I covered gold, didn't I? So into December support, I thought this silver was going to turn around up here. We actually had a potential buy signal there. New low on the second, new low in this run, and immediate close higher, but they just sold into that, and we are looking as if we could come and see this 21.36 at the moment. No sign of buyers stepping into that one at the moment. Let's have a quick look at the pound, because that got, obviously had UK rate rise last week, but that did nothing. It came swiftly after the US rate rise, and so was pretty much cancelled out as far as the pound's concerned. So unless we close back above 125, this is lower as well. There appears to be some volume coming in at the moment, so a stronger pound is an option. This benefits, incidentally, a stronger dollar versus the pound benefits the FTSE 100, which is why the FTSE 100 has been slower to pop down again, because so many FTSE 100 companies trade in dollars. Their earnings are in dollars. Right, let's cut across to a couple other commodities and we'll get straight into stocks. Wheat. It's struggling. So this is a wheat shown traded in dollars. So we're just under the $11 mark. So with a strong dollar, it's finally really capping this. So we've got a potential lower high. So this might come down back down close to 975. Assuming we close there. Beans, they are ahead of the game. What the beans do, the rest of the grains tend to follow. So these beans have broken through support, might come down to that 1483, at which point I will buy. I will get back into beans if they come down lower and hold that. Natural gas, let's keep a tab. This was still punching higher into last Thursday, so it's only just started to pull off. So I would be a buyer of this if we come down to 53 and hold. Anything lower would be a bonus. 47 would be a lot better. And normally this is already drifting. This would normally drift a lot lower by now. So this is obviously its highs were sustained with geopolitics, but we have now broken some support, and so these lower numbers are likely. Would I short it? No. If I'm going to short anything, I'd much rather short a weak sector, a weak stock, or a weak commodity in a weak sector, not a strong sector, a strong commodity in a strong sector. It's not the way I do things personally. Quick look at, there's a lot of red on the charts with this strong dollar. Orange juice has been on a great run, but the strong dollar is killing it. Right, let's get straight to stocks. Let's look at banks first. Let's kick off with Lloyds. Yeah, we've just broken structural support here. So we had this trend line coming across last week, and they just sold into it, just took profits into it. And at the moment, we look as if we could at least come down to 40, 41. Would I be a buyer down there? Yes, if it held, definitely, yes. I am liking the support it's got down there. So a lower number looks likely. Barclays, sitting up, well, this has already come off, isn't it? This has already come off from 220 right down to 140, 138. So the profit taking and well, somewhat selling was already in place before Lloyds came off. So I'm still in this. I bought a couple of positions down. I got as low as 142, 143, I think. I did initially buy at about 145, 146. So I've got a couple of positions. I'm full size positions. If we start to close under 140, I'll take them off. In the meantime, we are coming down on lower volume. So I need this to turn around pretty quick. Looks as if 142 is likely. But in the meantime, be careful. Standard Chartered. Well, this has been on a great run anyway. It's hit the buffers up there at 483. So very divergent up there. So it's at all possible that could come down to the 480 mark and possibly even lower, unless we can hold this £5.30. Quick look at other ones, other financial institutions. I've got blockchain. No, that looks as if that's going to perk up, and came off. Direct Line Insurance. No. Would I buy this? Yeah, it's getting to a point where I would buy this. I would love to see that come down to close to 220. If it turns around and closes above 240, the selling may be over. But it shows you just the sort of weight of selling that's going on in this market. AJ Bell, I was stalking this for long. I just backed off. Now, we appear to have some volume coming in on this. So if we do get a higher close, I would above 250, I'd be interested in that. If I pan back, you can see we've come right back into March COVID zones. So I'm getting interested in this one. This is a pension provider. Getting interested. Let's compare that with Hargreaves Lansdown. Yeah, see that may be seeing buyers stepping in. This is obviously the better brand. Let me just set this up. Where's the 2020? $2021 range. That's off the scale. That's off of my scale at the moment. But I'm going to make a note of this. I need to check the balance sheets of both these guys, but my preference is going to probably be Hargreaves on the basis that they've got a better brand, a more visible brand. So I might start to buy into that if that shows willing. Right, let's look at retail. Card Factory, I am leaving alone for now, although it does appear that that 67 has been sold into. You know what, if that gets back to 62, 64, I think I'm going to start shorting this, because I think this has just been refinanced, so it's popped up on a refinance deal. I think these guys are sunk. I think it's a terrible brand in a very weak sector. And so I need to think about shorting that if that pops back up to resistance. Right, Boo. Chugging along, just about trying to survive. ASOS is in trouble. It's just not doing it, and could go and see £9 at this. It looks as if that could go and see £9. Let's look at, let's stay in the closed sector. Next, looks lower. No buyers appear to be grabbing that at the moment, and that could come and see 55, 56 again. Shoe Zone. This is a horrible stock. I would love to see that push higher, but my focus is going to be on Card Factory. This is the guys that do, this is falling out of the tree, airport catering, sell sandwiches in the airport lounges. Really nice run up here into February this year, and boy, they just caned it. I actually thought that this would step up to the plate and it would start to close higher, but that's fallen out. Chewy, I've classed this in retail because it's reliant on retail consumers, so why not? WH Smith's, these are horrible charts. These markets are not holding up. Ted Baker put itself up for sale. Well, that 156 was shortable. I would leave it. I'd back off on anything that's potentially going to bid up. Premier Foods looks lower. Airlines, AIG, lower. EasyJet, lower. Tesco's. That's gone back into resistance. The volumes are not great though, so I don't trust it personally. That's relative strength. That is decent relative strength, but not for me. Sainsbury's has picked up as well. I mean, that's a potential buy signal. New low in the range, close above. Volumes are picked up. That is a move off of May's support, May last year. So that is a buy at £2.30, but you're going to have a stop under 2.20. So the risk-reward ratio is not bad on that. But just be warned, this is not a happy market at all, far from it. Royal Mail, I took a chunk out of this and backed off. It's come down on volume, so I'm steering clear. I mean, if this obviously the retail sector is so exposed to all these high energy costs and inflation. And yeah, the miners are pulling right back as well. So I can see that coming into 19. This is Pan-African. I can see Pan-African doing 19. Sylvania, lower. Hochschild, gold miners trying to hold. I wouldn't buy it at this stage. Here's some US miners, HL. Ooh, yuck. But I'm interested, if that comes down to that 450 and holds, I'd be a buyer. But if you look at let's look at basic materials, gem diamonds. That looks 55. I think is a buy in that one. Elementis, nope. I'm stalking this one for a buy, but not at the moment. TPI cap, commodity brokers, lower. Let's come right back to the breakout area. So that again, this is a key one on my radar. So I will stalk this very much. Man Group, same story. That's hit the buffers and that looks lower. Rio, lower. Wow. So I'm interested in, so at the moment I've got target to short Card Factory, a potential buy in Hargreaves and TPI cap. What are you looking at? Energy, let's look at energy. Petrofact has come off the boil. That hit 150 and that's currently 142. I'm still in this at the moment. I need to be careful I don't give too much profit back on that. Gulf, Keystone, yuck. And Tullow, yuck. Whoa. See, it has been, that's a head and shoulders sell up there. Yeah, we've talked about this resistance area up here on Tullow. And this time it's made a lower high and breaking down on volume. So I can see that coming lower. Surprise, surprise. Let's look at Glaxo. AstraZeneca. All coming off. Let's look at, I've not got Pfizer on this list for some reason. Just look at Pfizer. Last I looked, it was holding. Pfizer's interesting. We're resting on a lot of support, a lot of trend line support. So if we can start to close above 50, we might stretch our legs and go and see that 60, 62. That's threatening to hold, but if it breaks that low, then that's lower as well. Right, I've nothing else to look at this stage. I did write a couple down. Let me just find my notes. A couple came up on a scan this morning. Oh, no, here they are. Oh, I have to go back to the scanner. Hang on. I'll pop them in the room later because I can't find them. Oh, here we are. No, leave it. All right. Yeah, anything you want me to look at? No, I didn't. These are just coming off. I got out of BT and didn't get back in. I can't remember. I got out. I think I got out of BT at 199 up here. Yeah, I got out of BT in these February highs. I fully expected to get back in at 150, and it's not doing it. It's not seen 150 yet. I wasn't around when it dived into 153, so I would happily get in that. Let's look at Vodafone as well. Hang on. Yeah, it's just I would love to get back in these. If this one comes into sort of 115 and get some volume, but then I would get back in. But in the meantime, I'm just sitting out. I'm even Rolls-Royce. Rolls-Royce looks lower. This is, yeah, it's just results on Thursday, right? Okay. QQ has had a good. I've got out of this one too early. This is still pushing up on volume. Wow, this QQ is a lovely stock. Got out of that one too early. Anything else you want me to look at? Because I'm done. I got nothing else on my scan list. I just look at some. Let's Gilead. That begins to look interesting. Let's look at Kingfisher and Wix. Right. Ooh. Retail sector. Wow. Good. Let's have a look at. Before I do that, I'm going to look at a couple of disruptive. These so-called growth stocks. Wow. Palantir. This was really hyped up. Constantly talked about stock, and that is sunk. God, it wasn't that long ago. It was $45, and now it's $7.40. Wow. Let's look at Uber. Yuck. Twitter. Kingfisher, right. That's DG, isn't it? No, okay. Okay. Yeah, it's perked up. There's a gap there. It's not gap filled. That I'm very suspicious of stocks that don't fill gaps. That was a decent volume today, but I'm very, very suspicious on stocks that don't fill gaps. Oh, you're waiting. Okay. Well, I tell you what, I think you might see 215 at this rate. You might see a gap, a full blown gap fill and test a 215. Let's look at Wix. I wouldn't be a fan of this. I'm not a fan of what? This sector. That's got a huge amount of resistance. Not for me. Right. It's just not for me. I just wonder if that's going to come back to close to 150. Very precarious. Everything's so precarious. I wouldn't get involved in that at the moment. Right. Thanks for joining me, guys. Thanks for your input. I will do a short video midweek, but I am at long last putting together a support package for this at long last, after a lot of calls on that. So I'll update you on that. So I'll be doing a short video midweek. Otherwise, I'll be back here next Monday. Thanks very much. Thank you for joining me, and have a good evening. Cheers. Bye.